Long-term concerns I have for the global economy, impact of slowdown in China, definitely happening, European cohesion, mortgage finance system, deficit spending, and income inequality. Recessions are caused by monetary policy tightening, overborrowing, fiscal policy shocks, and financial sector dysfunction, which is definitely what we're in. This is just something that hit us and we basically closed everything. So let's talk about the US. What happened in 1934? Fannie Mae was created, and Fannie Mae was created out of the Great Depression. And this is important to understand because here we were, all money was privatized back then, and we were in a horrific depression here in America. And that's when the government stepped in, and they created Fannie Mae so they could buy back mortgage securities. And what this did for our economy was it basically flooded the economy with money, which was incredibly important. It's quantitative easing. We've all heard it. The first time we did quantitative easing was 2008, and that did pull us out of the big recession of our lifetime. Obviously, everybody remembers that. Quantitative easing is a form of unconventional monetary policy in which a central bank purchases longer-term securities from the open market in order to increase the money supply and encourage lending and investing. Quantitative easing is a process whereby a central bank, such as Bank of England, purchases existing government bonds in order to pump money directly into our financial system. It is regarded as the last resort to stimulate spending in an economy when interest rates failed to work. Our interest rates are low. You wouldn't think we'd need quantitative easing. However, nobody thought the COVID crisis was going to completely shut us down. America pulls out of depressions, much like in 1934. They pull out of recessions through housing. Real estate makes up or has a direct effect on over 60% of our entire economy. Think about the companies that are supported by housing. We have Home Depot, Target, Lowe's, IKEA, paint, carpet, blinds, furniture, interior designers, realtors, lenders, you name it. It's a huge portion of our economy. So on March 15th, 2020, the Federal Reserve announced it would revive the QE program. It would purchase $500 billion in U.S. Treasuries and $200 billion in mortgage-backed securities over the next several months. It wanted to make sure banks had enough liquidity to help businesses impacted by the corona pandemic. Guess what? This isn't even close to enough. And so while it was great on March 15th and you saw the stock market go up, Trump then came out and said, you know what, we're going to do unlimited quantitative easing, which means the government is going to pump money into our economy. So the drawbacks are, if you look at the second part of this, it causes inflation. So in a worst case scenario, the central bank may cause inflation through QE, but that hasn't really happened. They're going to do quantitative easing in order to make sure we do not stay in a recession. Trump wants to get reelected. He's going to make sure our economy is roaring by the time we go to the voting boxes. So what does it mean for us? Unlimited quantitative easing? It means interest rates are going to go down. According to the bond market, our interest rate should be at about 2.5%, but we don't have enough money in the market yet. So interest rates are more like 3.5% right now. But as more liquidity comes into the market, and that is going to be happening through our government, interest rates are going to go down. Come this summer, if you have great credit, you're going to get a loan for about 2.8%. None of us have ever seen that in our lifetime. It's also going to make the economy roar. We're going to have growth, we're going to have inflation, and we're going to have a booming economy. This is great for people who have equities and own real estate. This is not great for people who are renting. By 2024, we have the potential for 16 million new additional households. And that's all from the millennials. The millennials are going to start having babies, and they're getting married, and households are growing. So do I rent or do I buy? Average homeowner in America is worth $231,400. Average renter in America is worth $5,200. Where do you want to be? So how do I maximize the 2020s to prepare for the 2030 depression? If you've been tuning in, you know everybody's going, oh, here's the Great Depression, it's happening. No, not at all, not even close. If you're thinking that, you're wrong. The Great Depression is going to happen in 2030. So I need everybody to be really careful and play it really smart this decade. We're going to see, I need everyone to invest in inflation hedged items. That's equities and real estate. You need to stay involved before the depression. And the reason why you have to stay involved, because a lot of people are like, oh, I'll just wait till 2030 to buy my house. You're going to get creamed. The next 10 years, we're going to have a lot of volatility. We're going to have inflation. And if you're sitting there with some money in your bank account, that money is just going to go down every single month. You need to get your money into the economy and hedge it against inflation. You know, there's three different things, right? If you're renting, I need you to buy your property as soon as you possibly can. There's lots of different programs out there. There's lots of ways to do it. I'm happy to sit down and chat with you about it. If you own, I want you to either keep your house unless you're in debt. If you're in debt, I need you to get out of debt and get liquid. So I need you to sell your house, because I'm sure you have equity in it at this point, pay off your debt. If you're not in debt and you own your house, you really should be looking at buying an investment property. 1 out of 2 people here in Denver, Colorado, Denver Metro, rent. That's 50%. There's lots of tenants out there. And you know, if you, the numbers show that people who retire that own one investment property retire 36 times more wealthy than just a regular homeowner. Put that in your perspective. But I want to get you ready also for 2030. We have 10 years to get our crap together. And there's one of the things I've actually come up with is, because of all the volatility, as soon as the stock market's high, I want my clients to pull out of the stock market. I want them to take their 401ks and their IRAs, and I want you to go into a self-directed IRA. We have all the information on that, and we can show you how to do it. It's incredibly inexpensive, but it would be a much better investment vehicle than keeping it in the stock market. So what types of real estate will best hold its value during the 2030s, during our Great Depression? The lesson from the Great Recession of 2008 is that while single-family homes are not immune to the effects of the Depression, they are far better than condos. I want my people buying houses with yards. How long do you anticipate 2030 to happen? Honestly, I thought we'd hit our deficit in 2033, except that the coronavirus and unlimited quantitative easing, has anybody checked out our government debt? It's crazy high. Right now, it looks like our low point of our depression will be 2036, which means I want you to be liquid and in a ton of cash and ready to buy everything you can possibly buy in 2036. It's gonna be a 10-year period, so I'm really sorry for my younger people. You know, they had 2008, 2009 to deal with. Now they've got the volatile 2020s, and then they're gonna have a Great Depression in 2030. So how can people in their 50s, 60s, and 70s best prepare financially, keeping in mind all the aspects of their lives: health, financing, housing? The single best answer is to be debt-free, cash rich by the time we transition from the rise of the 2020s to the depression of the 2030s. That's why you've got to buy. You can't wait till 2030 because you're not going to make enough money in inflationary time in order to pull out. You'll also want to make sure you're completely switched out of equities at that time by 2030. And invest into cash, into certain government bonds. Government bonds will be protected. America's going to stay. The only 3 countries that aren't going to be affected by the Great Depression, because this is something you could do, is you could move. You got Switzerland, you got Australia, and you got Canada. Those 3 are not going to be participating, but those are the only 3 countries that will not be participating in the Great Depression. So that's the end of this, and I just wanted to say a few things. You can't have the government print billions of dollars and give it all to us. We're all sitting at home. We're all holding on to our pocketbooks. You know, some people think it's the next great apocalypse. It's not, and the math shows it. So I know I have friends, dear friends, that have lost parents to this. I want to keep our elderly as safe as possible. Please stay home. You know, if you leave a space and go to a new space, wash your hands. Do everything you can to be smart. But the really smart people are going to be the people that are going to buy real estate in the next couple months. This is going to blow over. And when this blows over, the pent-up demand is going to be so huge. You are going to see everybody come out. You think about it. You're sitting in your little apartment. You're not allowed to leave your apartment. And you're going, what am I doing in this small space? I need something bigger. I want something with a backyard, etc. When everything is lifted, you're going to see a flood of people because interest rates are going to be in the 2s, and you're going to see real estate going up. So be smart, be ready, and if we can help you at all, give us a call. We'd love to chat. 303-847-1868.